Yeah, yeah. These banks ain't loyal. Yeah, yeah, yeah. Yeah, I like that song. These trusty banks don't let me down. And this is a true story. Don't learn the hard way. Bank loyalty and mortgages do not mix. Hi, I'm Keith, owner of MrMadLife.com and real estate investor. As the title say, we might as well just go on getting into this. I have bank accounts and so do you. But that don't mean who we do business with as far as our banking is going to make the best decision, the best role to play when it comes to dealing with our mortgages. Yeah, I know they probably offer those types of, they offer home loans or what have you, but they don't offer all types of home loans. And their underwriting is different from other institutions. And your situation might carve out for something different than what they have. Now, yeah, you trust them, you should, and they federally insured, just as I do. But that don't mean their options are the best options for me, because there's more than just meets the eye and trusted relationship to consider when you're talking about one of the most important decisions you're gonna make in your life, which is getting a home loan. I'm gonna kick off into a story, and this is actually true story by someone that I follow on social media, Mr. Lamar Tyler, very successful entrepreneur. I've been following him for a while, and he wrote a interesting post on LinkedIn that caught my eye. And also, I had a previous conversation with a friend of mine on a similar scenario. And so I'm like, really, this is really happening. Now, sometimes, depending on what the situation you're getting the mortgage for, there are, you're in a time pocket where you have to get something done. And the sooner, the better. And in this situation, it didn't work out well for him. And I'm gonna read a little bit of the article to you. So here we go. Lamar Tyler, and this was, like I said, he posted it about a month ago. He said, I had $600,000 in cash in my business checking account, and his business had, and himself has A1 credit. The bank I had been loyal to for 15 years since still made me jump through hoops for a commercial loan. Now, I know some of you might not be interested in a commercial, but commercial and residential loans are very similar in the criteria, okay? And if you own a small business and your small business is doing well, it would probably be in your best interest for the long haul to invest in getting some type of real estate. And that's because, you know, small business got ebbs and flows to it. And when you're doing good one year or a couple of years, that might not be the case in the future. So one of the better things to do is to buy an asset, which is a piece of real estate. So you still need these tools. Anyway, he said that here's what happened. When I decided to buy our first commercial building, I went to the bank where we deposited every single dollar since we started our company back in 2007. Every transaction, every milestone, the bank knew our financial story. The front desk ladies loved us. They gave our kids candy and called us by name. So they had a very good relationship with their bank. But when I needed a commercial loan for a building, suddenly I was dealing with people in the back hallway I had never seen before, okay? The process was insane. First, they wanted my standard business financials. Then they wanted more documentation. Then they wanted me to come in for more meetings. Finally, they asked for what my CPA called one step short of an audit. My CPA, who had his practice for 50 years, told me straight up, I wouldn't give these people nothing for this little bit of money. Now, he said, I was emotionally attached to the building, and I could see my team walking to lunch in downtown Lawrenceville, I imagine it's Georgia. I had the whole vision mapped out. So I paid thousands of dollars for the extra paperwork that the bank had asked. And they took 2 weeks to compile everything and delivered it to the bank. And the bank's response, well, I think we got too much information. He said he was furious, and he was a month into the process. He had more cash in the bank, that's $600,000, than the building that he was trying to buy cost. He had perfect score, credit score, and he had solid business history with them. And that's when he said he felt like he was being treated differently. And within 48 hours, he got the approval letter. But the damage was done because that good deal he wanted to get for that building, somebody else snatched it up while he was waiting and going through getting all that paperwork done. So time was of the essence when you see a good deal, especially in real estate. And you need to have your ducks in a row. Now, since then, he says he got with somebody, and that person has helped him purchase several other businesses, buildings, and it has worked out well for him, and he's going to continue to do that. But the lesson that could be taken from that is he should have done some sort of pre-qualification himself before he decided to go that route with that lending institution, who was probably perfectly fine. But all banks don't fit all people in all situations. Even though they say, hey, yeah, we do commercial loans. Yeah, we do residential. Yeah, we do reinvestments and things of that. But that doesn't mean the underwriting process behind it, which a lot of them, like I said, they were advertising on their site, is going to fit your situation. You and how you make your money is different. It's different. Now, you're probably saying, well, he had $600,000. He should have just told him, hey, I'm going to go ahead and buy this straight out. Then they could have probably ran through that. Yeah, but that's not smart business to spend all your liquid capital into an investment. The mortgage that he's going to pay on that investment is tax deductible. So it comes off his income, reduces his income. I teach all of this in my transformational book, How Smart, which is in the description down below. Anyway, I should write back to him. I'm gonna tag him in this video. I'm gonna sure write back to him some of the things, because he has the money, he has the capital, so he's paying somebody else to do the thinking on that side of things for him. But he could save some money if he did it himself. Now, most people ain't gonna have thousands of dollars to go have a CPA or an accountant go and pull up all these financial records to get this type of deal or financial deal and everything. But that's stuff that you can do yourself. And in places like that where they're going to request all this information, those are ones that you want to avoid. So it's important for you to do the pre-qualification information yourself. Okay? Now, I got all the details of how to do this in my book, How Smart. It's a play-by-play book on being pre-qualified. Teaches you how to pre-qualify, what the lenders are looking for, and how you can go and figure out which lenders that is going to be best fitting your scenario, so you can go about and get your home loan or your commercial loan, or maybe even refinance. You know, a lot of people just refinance with the same place. You know, your bank don't necessarily house your mortgage. A lot of times, that money, $200,000, $300,000 that they spend on a property that you have a mortgage with, they sell it on the back end. I call it getting you ready for the real estate, getting you ready for the stock market. They get your credit and everything, and they compile this profile of you and your situation, and then they put it together with other people who've gotten loans with similar profiles, and they bundle it as a package and sell it on the secondary market. Then they take your interest rate. Let's say your interest rate is what, 6.5%, 7%. Okay, well, we're gonna maintain servicing rights, meaning you will never see it, but the bank has sold it. The bank maintains, say, 2 or 3% of that interest rates, and they do servicing. They send you your statements and all of that, and then you make your payments to them. Meanwhile, the rest of the percentage, the 3 or 4%, has been sold to a real estate investor who has maybe a couple $1 million sitting somewhere, and they're making the interest on that money that they just kicked out. That's how that works, and they call that on the secondary market. But you don't have to worry about that. That's not really pertinent information, but they are getting you ready for the stock market. That's what they do. But in this situation that Mr. Tyler was speaking about, he was in a time crunch where he had to get something done. You may be in a time crunch, maybe with a refinance. Maybe you're trying to refinance to get a better rate or lower your payments, or maybe you're doing some debt consolidation, and time is of the essence, especially right now in these crazy times that we in. Or maybe you're trying to get a house, so you want to have this information. In the market right now is very competitive, so someone subdivision or whatever, somebody selling the house, somebody else is looking at it too. Somebody else see this deal, and you don't have a huge window to go and take your time to go about doing things. So you want to do things efficiently, effectively, and get the best deal possible. And the only way to do that is to go through pre-qualification steps. Now, my step-by-step playbook is very detailed and it's very simple to follow. But these are, like I said, repeatable steps that you could do to teach yourself and transform the way you think about real estate. It's not intimidating like we think it is. And that's because we suffer from a lack of knowledge. That's why the wealth gap is increasing in this country. And the way to make a step towards wealth, one of the best ways, is to buy real estate. Houses, land, commercial properties, or what have you. Those are assets that tend to gain value and not lose. All right. So clicking in the description, you can drop me a comment, and look forward to chatting with you again. Click on the link, House Smart, the play-by-play step book. Trying to help you get informed, help you make better decisions, and help you save some money. Talk to you later. Peace.